This is the Reinforce Your Gym podcast with your host, Dustin Vogel. This show is about arming gym owners with the tools, strategies, and lessons they need to take their business to the next level. That way, they can make a greater impact in their community. Now, let's get to work and reinforce your gym.
Hey guys, welcome to another episode of the Reinforce Your Gym podcast. Today, we are all about saving you money and legally putting more money in your pocket with my top 10 tax strategies for gym owners. All right. Now, I have hired multiple specialists over the years, tax professionals, financial advisors, wealth managers, and I have basically picked up little nuggets from each of them. And so I compiled my best ones and I'm giving them to you guys here today for free. So if you guys enjoyed today's podcast, all I ask in return is please subscribe. And if you would give us a 5-star review, because that's my goal, is to make you very happy as a listener, because I am making you money. All right. So let's dive into this stuff. Okay. Now, first things first, we also have to hit the legal disclaimer. I'm not a tax professional. Talk to your tax professional before you take action on any of these things, because you need to make sure that they tailor it to your unique situation. So that's the legal disclaimer. Don't come after me. This is me just giving you general advice. You have to customize it to your situation. All right. So let's get into this. Now, the first things first is you have to have a surplus they're going to end up having to pay the government, right, to use these tax strategies, because we're trying to reduce your tax burden, right? So that means a profitable business with a wage being paid to the owner and profits and things like that. So what we're going to do is we're going to use a lot of things that are completely legal to make sure you take home more of the money you worked hard to earn. All right. So let's dive into it. First one is the Augusta rule. So if you have not heard of this, you can basically rent your residence that you own and is your primary residence to your business for up to 14 days per year. And it has to be at fair market value. You can't have, your house being rented for $5,000 a day unless you live in a mega mansion that it could totally achieve that on the market, right? You have to look up what would a house of my size generally get. And so what is that reasonable rate? You can multiply that for 14 days and you can then have the business pay you that, and you have to make it legitimate. So you can use something like ChatGPT, say, hey, make me a rental agreement for my business to, lease it, my house out for 14 days. And then there has to be like an actual reason. So cool things that you can do is you can have team trainings at your house and invite your team over, cook them up some lunch, just talk business, have some team meetings there, some team trainings, where you're going to help them develop themselves. You can have client events. You can offer, if you're in a mastermind or a coaching program, to host it at your house, but there's some sort of event taking place, and that's why you're renting your house to your business. So this is a wonderful one. It's very low-hanging fruit. Everybody can do it. And again, something that you could do rather quick if you need to get a quick tax relief before the end of the year. Hey, have a Christmas party at your house with your team or your clients, right? Like something of that nature to get that Augusta rule in place. So that's number one. All right, we're going to go to number two, which also has to do with your house, and that is home office deduction. All right, so what they say is it's the percentage of your house being used for business. You can then write off that square footage. So, I'm here at my house. I got a home office. This is a nice size room that I'm going to have able to be deducted. Let's say I have one of my bedrooms I use for storage. Maybe you store supplements, t-shirts, equipment. That room is now being used for business. Let's say you have a podcast room or a filming room or a place that you do, your content. Anything that, again, if you're filming like home workout videos for your clients in your garage, you have a garage gym, you can chunk it all up and find little areas. So again, this has to be something that your CPA or tax pro is going to go through with you and decide how many square footage are we able to write off. And we can justify if it's for gym operations, if it's for marketing, if it's a home office setup. These are the things that you can deduct. All right. So we're moving on. Now, if you got kids, number 3 is going to be for you. All right. And this is about hiring your kids through your business and paying them a wage tax-free up to 18 years old. So at the time of this recording, it's 2024. You could pay your kids $14,600 a year and it's tax free until they're 18 years old, right? So you can be the manager of the money, say, my kids are getting paid, but hey, I don't trust them. Obviously, I'm going to be the manager of their money. Or you can treat it like a savings account that keeps accruing over time. But like that is something that they can tap into. And then all that it requires is that they're doing something in relation to the value you're paying them. So a lot of people don't even max it out. They might pay their kids $500 a month or $600 a month because this is almost $1,200 roughly a month you can pay them. Maybe you don't have $1,200 worth of work for your kids to do. So you can reduce the wage based on the volume of work they're doing. But hey, they could clean the gym. They could be on camera and they can create content. My daughter, Chloe, loves Canva and she makes me Canva images for my graphics. My son loves editing, so he edits some of my videos, but they're at the age to do that, right? So like you got to make sure that the work is appropriate to their age, their skill level, and their time involved in the business. But that is the total eligibilities, up to $14,600 per year per child, tax-free up until 18. So this is a great way for them to get a job, right? They can be employed by you, family business is hiring them, and they're going to do tasks that they're able to handle. So use that, and that is a great one for you to save money on taxes. All right, number 4 is similar to number 3, and that is maxing out your IRA Roth. All right, so you can do that for yourself, your spouse, your kids. At the time of this recording, again, 2024, your max contribution is $7,000 per year, tax-free. Obviously, you can't touch it until you're 65 without penalties. But if you're over 50, you actually can contribute $8,000 a year, so $1,000 more. And obviously, the beauty of this is it's a compounding nest egg that if you're putting this into it every single year, and then you're, buying stocks or doing things with it, like by the time you can pull it out, you're going to have a nice nest egg for yourself. But similar to, number 3, which was hiring your kids and paying them, if you also gave them an IRA Roth too, on top of that, you can immensely reduce your tax burden. And man, now your kids are getting a nest egg and they're starting the compounding early, right? Gym owners, let's be real. You don't love lead follow-up, and that's why I started Gym Reinforcement, so you can pass it over to us, because that's probably not why you started a gym. That's not what you love to do in business, is to chase leads down all day long. Well, hey, hand that over to me and my team of remote sales reps. We're going to text them, call them, email them, social media, DM them. We're going to do all the channels so that you don't got to worry about it, and they're going to get reached out to quickly. And that is what we do at Gym Reinforcements. Now, here's the thing. There's a lot of AI and bots and automations out there that can reach out to your leads, but let's be honest, it's not very good, and people could tell right away. You probably would rather to have human to human customer service from start to finish, meaning from when they opt in to when they get serviced by your coaches. We want to have that exist throughout the whole client journey. So let us step in, let us engage your leads, let us sell them for you. And that way you can do what you do best and serve them and get them results. So if you want to book a call, go to gymreinforcements.com and we'll talk soon. So number 3, the first one I gave, about hiring your kids, that's just like a working wage that they can spend and use as, immediately. The Roth, obviously they can't, but like if you have, again, a big tax burden, stack these suckers up. So if you take $14,600 and then you have the $7,000 in Roth, we're paying them over $20,000 a year, and it's tax free till they're 18. I don't know about you, but what I've seen the government do with my money, I don't think that they're going to do a good job spending it. If anything, they're going to misuse it, mishandle it. And I just want to help gym owners like you keep more of your money, because your money is actually going to be spent in a wise way. You're going to create jobs. You're going to open and expand your business. You're going to invest in your kids' future. Like, I want the money to go to those places, and I'm sure you do too. All right. So onward. Number 5 is, did you know this? Your marketing and advertising expenses are tax deductible. Now, people hear tax write-off and they just think like, this is free. Do I get this stuff for free? You're spending the money. You're just deducting it from your tax burden, right? So digital advertising, which is Facebook ads, Google ads, anything like that, your email system, your software, your texting system. I found out softwares as well, right, to run the business. Print media, your website costs to host it, to do SEO on it, to get it designed, email marketing, and then social media platforms as well. So Those are all write-offs, guys. So like, again, bring this to your tax preparer or pros attention if they're not doing it, because these are tax deductible. What else is tax deductible is number 6, and that is continuing education and training. That is for your team or yourself. This is going to be specific to the business. So this is certifications. If you're, like I've seen a lot of gyms offer that they'll cover half of their team certification. So if they want to get Precision Nutrition certified, the team pays half and then you pay half as like a cool incentive to working for the business. So again, CPT certification, hormone specialist, anything like that. Those are continuing education that are tax deductible. Workshops, seminars, live events, conferences, all tax deductible. If you go to anything like that, that is something to, keep in mind. Online courses and membership. So if you buy a course, again, that is teaching you how to better run your business, it could be from the fitness side of the house, it could be from the business side of the house, you can deduct those expenses. And then a big one I know a lot of gym owners listen to and read is books. All right. So if you're buying business books, fitness books, audibles, then those are all tax deductible because they all fall under that continuing education category. All right. So that is number 6. And I know I'm going to save a lot of people money on that one. Next is number 7, and that is employee training and development. So this is anything you send your team to, help them to develop. So the first one I was thinking more for you, your self-study, your self-development, your continuing education. But number 7 is also, don't forget your team. If they get a cert, if they go to a live event, if you have a speaker come in and speak to them, if you have them go to any customer service type of training, those are all write-offs as well, right? So investing in your team helps you to make them better, and it's a tax deduction for you. All right, so those two, very, very similar. But number 8 is different, and that is professional services in the form of consulting and coaching. So if you hire me to be your business coach, hooray, that is a tax deductible. You are gaining all the knowledge, all the coaching, all the clarity, and you're reducing your tax burden as well. So that goes for anybody. But again, I'm going to hit a shameless plug. This is my show after all. Marketing consultants. You can go on, a freelancer website and hire a marketing consultant. I say, I want you to give me feedback on my marketing. Tear it apart. Tell me how am I doing on my social media. Here's some emails we send. Here's some Facebook ads. And I want you to consult me on my marketing. And so that is a tax deduction. And then also legal services. If you need to get your contracts created, if you need to hire, again, any type of legal services to make sure you're compliant with the law, like for employment laws and things like that, to help you write up an agreement for a lease, those are all professional services that you can use as a tax deduction. So hopefully that's one that you guys are investing in, and now you're going to be able to write it off. Number 9 is facility improvement. So this one I know my gym owners are going to love. That is remodeling. This is expansion. It's putting in new lighting, HVAC system, flooring, painting, signage, any kind of cosmetic improvements. You can even use things like bonus depreciation here. But like, this is why investing in your facility helps you, because you're also getting that tax burden removed, and it keeps you looking fresh and modern, and shows the clients that you care about your space. You're not letting it look outdated. I've been in some gyms where I could tell they have not done any renovation since like the 90s. Like the equipment they own, the color scheme, the lighting, everything is just like super outdated. And guys, people don't want to train in a space like that. Eventually they'll say, okay, I'm saving money. It's super cheap to be here, but like this place is starting to look tore up, and I'm going to go find a new, cleaner, more modern gym, right? So keep your space looking nice, all right? Modernize it, and this is a good reason because it helps you to reduce your tax burden. But I know a lot of gym owners that just spend money on this, and then they don't even apply it to their tax at the end of the year. So they just eat the cost, and they don't get to reap the benefits. So it's almost like you got to pay for that twice, right? So like, invest in this stuff, but also make sure your tax pro is using it to your advantage. All right, number 10, I'm rapid firing through this because I want to make this as short and insightful as possible. That is your travel expenses. All right, so anything that you use to travel, if you're going to rent a car, Uber, Turo, you take a plane, any transportation, you can write that off. Lodging, hotel, Airbnb, anything like that. Again, that's a write-off. Meals, it's at 50%. There's talk of it coming back to the old 100%. Again, I think it was like the 90s that you're able to run off 100% of business meals, but they cut it to 50%. There's talk of it going back, but again, it has to be business related. So you take your team out to eat, you take a client out to eat, you and a business partner go out to eat, 50% off. And then if you're out at a conference, all of those are business meals. Those are all 50% off. And then car rental or mileage. All right. So again, those are all in part of travel. Now you can't write off going to your gym back and forth or buying that car that goes back and forth. It has to be extra stuff to run the business or part of business operations. But normal travel is not considered a travel expense that you can write off. All right. Now, I am going to give you a bonus one, and that is charitable contributions. All right. So hopefully you guys are doing something to give back to the community, do something charity-wise. But the other benefit for you, it is a tax deduction. So if you say, hey, we're running a promotion, we have a registration fee, 100% of those registration fees is going to disaster relief or a homeless shelter or a food pantry or the local church. Whatever charity you feel good about, you can give to them. And again, that is a tax write-off. So leverage that as a goodwill to bring people in and as a tax deduction when you do the right thing and you donate, right? So all of these guys are my top 10. Now, if you want more, I made a free guide that actually has 20 tax strategies. I just decided to cherry pick my favorite 10 here and go over them with y'all on the podcast. But if you want the guide, then go ahead and DM me on Facebook or Instagram the word tax, and I will know that you want my tax guide, and I'll send that your way. All right. And that way you can get the full list, not just half of it, which is what I covered here on the podcast. So that's it, guys. If you enjoyed this, if you feel like you got a lot of value, if you feel like, man, I learned a couple tips that are going to help me save money, please subscribe and give me a 5-star review so that I know you enjoyed today's episode. All right. See you guys on the next one. Gym owners, I want to officially invite you into my free Facebook group just for you. It's called Fitness Sales Made Simple. And essentially, I'm sharing free resources in there all the time to help you grow your business. Doesn't matter to me if you ever work with gym reinforcements, you can gather all kinds of cool content and tools and resources. We have free webinar trainings, free guides, free lead magnets, free scripts that you can send out to make sales, and it's all in the group. So go ahead and click on the link in the description and you could get inside and get these free tools. See you on the inside.